Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, where we discuss the biggest buzz on the D Street. We will start with a question on this show. Should you brace for price hikes in the new year on your favorite car and two-wheeler models? Well, seems so, as Tata Motors has already announced it will hike prices starting January. The big questions that we are going to be discussing on the show today are, will other auto companies also follow suit? And more importantly, will price hikes in January now offset the GST cut benefit that the government had rolled out just 2 months ago, followed by a lot of price cuts that these companies had taken? Thereby, will you lose out on the benefit? And therefore, is till December end the best time for you to probably buy your next vehicle? That's what we are going to be focusing on with our guest who will be joining in on the show, Avik Chattopadhyay. He's the founder of Indian School for Design for Automobiles. Welcome, Avik. Thanks for a lot for joining in. In fact, to start off this show, let me help all our viewers get a sense from what Tata Motors management has said, and you'll also listen to it. It is an exclusive conversation that we have with the management. Tata Motors has announced they will hike the prices due to tighter margins as input costs continue to climb. The announcement just comes 2 months after all these companies have slashed the prices. In exclusive conversation with Business Today Television, Shailesh Chandra, the MD and CEO of Tata Motors Passenger Vehicles, has confirmed that they will be raising the prices in the coming January month.
Sir, if I talk about, you just mentioned about commodity prices, input cost pressure, how are they going along right now? Because if we hear about commodity prices, it's of course been volatile for quite a longer time. How is it at your end, sir?
No, we clearly see that it has increased by roughly 1.5% of the revenue in the last one calendar year, if I see. And that is something you would have seen that industry has not been able to pass on. So I think the first opportunity for that may be January, where you'll try to at least partially recover. Rest we are also trying to engage into cost reduction initiatives, so that is also helping us bring down the cost.
But except the Sierra, do we see some price upward revision in January, sir?
Yes, I think Q4 you will see a price increase in the models, because that is something which the OEMs have been absorbing so far.
All right, so a clear verdict coming in from Shailesh Chandra, of Tata Motors, saying that, the companies, OEMs have to recover some of the cost pressures, and the one way how they will be doing it is by raising the prices of the vehicles. Let's go back to Avik to understand this. Tata Motors has already announced this, and, what they say is that they will partly look to recover some of the costs by raising prices, and apart from this, some cost reduction measures will continue at this point in time. Tell me, are there other reasons also that will lead to more and more companies also saying that yes, starting January, we will also start to raise the prices?
Yeah, the industry has been in a bit of a margin squeeze over the last 1 year because of various factors. You've got to look at the fact that you have to make investments in technologies, new technologies. You also have to keep in mind that you need to look at alternate sources for certain critical components, and that all leads to an overall increase in your costs. The GST price increase. The GST price drop was definitely a bit of a shot in the arm, which led to a certain price drop for the consumer, which was passed on by the manufacturers, but the margins are squeezed, and that is something which I guess the manufacturers did not want to work on till the festive season was going on, because the entire industry wanted very good sales. Now that has happened, reality strikes once again, and therefore the industry is looking at price increases. And for manufacturers who are betting a lot on electric mobility, the prices will go up. So brands which are offering more and more electric vehicles they will actually see a cost hike, and they will pass it on to the consumers definitely starting January.
Avik, I think the big question here is that just about 2 months ago, all these companies cumulatively reduced the prices on across the models substantially to pass on the GST cut benefit to the consumers, and just within 2 months they have decided that yes, in January they are going to go ahead to meet up some of the cost pressures and the margin squeeze and to raise the prices. The big question is, will this completely offset the GST cut benefit impact? Will it partly offset the impact of the GST cuts, and therefore what should investors and consumers expect?
What happened is because of the GST reduction, there was this attempt by the industry also to go out and tell the consumers that this is the best time to buy. Manufacturers also, I'm sure, they squeeze their own margins. Okay, now that is not sustainable for a long period of time. So we've had a terrific festive season. We've had terrific sales. We've crossed, the 500,000 mark in a month. So the narrative all looks very, very good. So as I said, reality definitely strikes back after that narrative. So once that narrative is over, that we've had bumper sales in a month or we've had bumper sales in a certain season, and it's because of the GST price cut or the GST cut, and therefore vehicles have become more affordable, manufacturers have to go back to business, right? I mean, you cannot keep, running a business at squeezed margins. And the GST price or the GST rate cut was anyways not coming to the manufacturers, it was going to the government. The manufacturers' squeeze on margins remain, okay, because of new investments, because of new technologies, because of new sources of technologies and raw material, and therefore you will pass it on to the consumer at some point of time. Now, whether it completely negates the GST cut, I would not have, I would not be privy to information of every manufacturer, but I actually have this feeling that when the price increases happen, you would actually see a significant portion of the benefit of the GST cut being covered up.
Okay, so in effect, do you say that the best time to buy your next vehicle would be by the end of December to take the maximum benefit of GST rate cuts?
I agree. December is always the best time to buy a vehicle, whether it's a four-wheeler or a two-wheeler. And I've always believed personally that it's even better than the festive time. Okay, and December will be the best time to buy a vehicle. I have been fortunately proven right a couple of times, and that the manufacturers do give the best deals at the end of the year. There are lots of factors which play in this. The same factors would play out even this time, and therefore, consumers wait for the month of December to happen. We're just around the corner, just 1 week left. By the 15th of December, you will actually see some very, very good deals coming along your way.
Okay, got that. Now help us understand when it comes to the demand within the auto sector. We had of course seen August, September, October being great months, for the demand. Thereafter we have seen some slowdown as well because the pent up demand got suddenly, pulled up during the festive season or the peak of the festive season as well. Going forward from here, what are the macroeconomic triggers that you're watching out for that could impact the demand? And how do you see the demand panning out over the next, say, 1 year?
To me, don't take it that I'm a pessimist, but I strongly believe that unless the two-wheeler industry and the two-wheeler market really revives, and when I say revives, what I mean is it is growing by by between 15 to 20% year on year, the four-wheeler market really will not revive. It will stagnate at somewhere around 4.5 million units per annum. India is not actually getting any richer. Okay, the ones who are rich, they are getting richer, but the middle class is not really getting richer. If you actually do a very unbiased analysis of the GST price cuts or the GST rate cuts, the actual real-time impact on the consumer is not that significant. So the cost of living is as high as it is. The salaries are not going up as much as we would like them to. Job pressures are there. Therefore, would the two-wheeler owner or the rider switch on to a four-wheeler? Not so soon. Okay, unless there are some really compelling entry-level four-wheeler solutions being offered by companies. So to me, the market would stagnate around 4.5 million units. The August, September, October is a cycle, and we've seen these cycles happen every 1.5, 2 years. This is a cycle which possibly, obviously, was led by the GST rate cut. We've seen a significant spike. I would see it flattening out by the time we reach February, March. To me, given the macroeconomic factors of the middle class, okay, I see the four-wheeler market at least remaining stagnant. Quite frankly, I mean, even if it grows at between 3 to 5%, that's not really growth. That is anyway what I call is amoebic growth. I mean, an amoeba also grows. So this is that sector growing. It has to be led by the two-wheeler market really reviving, which it still not has. Okay, you need to see a good clean 12 months of the two-wheeler market reviving. You need to see the entry-level segment reviving. Unless these two things happen, okay, the rich will just keep buying richer cars. Okay, the upper middle class will keep upgrading to bigger and more expensive vehicles. But will the new segments or the new entrants or the two-wheeler buyers or the two-wheeler owners, will they buy four-wheelers? I doubt it.
Okay. Help me understand when it comes to Avik, the current raw material costs, how do you see them panning out? That's a clear, major impact that leads to deciding of the prices for OEMs as well. How have you seen it, panning out in the last 6 months? What is the outlook for the next 6 to 12 months?
When it comes to RM, I'm not really a domain expert on this, but given my limited knowledge and understanding, RM costs would be kept the same. Okay, the critical industries, okay, which typically, according to me now, is obviously it's always been steel as one. It'll now be thermoplastics. It'll now be plastics, batteries, cell manufacturing, power electronics. Okay, the prices, they have definitely come down when it comes to electric vehicles over the last 5 to 6 years. I think it has reached a certain level where they're going to remain stable. They will not fall as they were falling over the last 5 to 6 years anymore. You would need the next level of disruption to happen in that sector to bring about another fall. Maybe one new technology coming in, one or two new materials actually being developed. Now, are we doing it as a country? Right now, not yet. Okay. Therefore, can we bring the costs down? Do we have the power to bring the prices down and the costs down? Not yet. We are still dependent largely on players outside of India. So RM costs to me would remain stable. They would not fall any much further from here.
Okay. Now let's talk about the company's performance in the second quarter of the financial year 2026 that's just gone by. We have seen the sector post strong double-digit year-on-year net sales growth for original equipment manufacturers, the OEMs, aided by early festive season, increased customer footfalls following the GST rate cuts. The big question is, will these earnings also sustain in the couple of quarters to follow? How would you assess that?
Now, this quarter has been very good. I mean, I would say typically the quarter up to July, August, September. You could add October there. Yeah, has been extremely good for the manufacturers. Would they remain on this upswing? No, as I said earlier. Okay, it'll flatten out. Okay, they will not remain on this upswing because this is a spike for various factors. This is going to come down. As you see, November, December, there'll be a little bit of spike because of the year-end buying, and also because there will always be this thing of car prices going up, vehicle prices going up. But then Jan, Feb, March, we would be again back to it's a bit of a I wouldn't say slackening of growth, but flat growth or a flat line. So if there's a flat line, there's really no growth. So all these manufacturers who are posting very good numbers now, yes, I guess they've had the best of the times, at least this financial year, and they should be ready to, again battle it out next financial year, which is why also there's no other option for them but increase prices.
Okay, let's now talk about the kind of sales growth that we've been seeing across the segments and try to understand where is the opportunity currently existing for all the investors also to look at. The Indian auto industry recorded retail sales recorded a growth definitely. Commercial vehicles posted about a 17.7% year-on-year increase. We've seen two-wheelers achieving a 51.8% year-on-year surge. Of course, driven by GST 2.0 and the reduced taxes, the festive demand and the rural purchasing that improved. That's according to ICRA report that we have. The CV segment reported retail volume growth of 17.7%, like I said, on a year-on-year basis, and 49% on a sequential basis as well. In October of 2025, we've seen medium and heavy commercial vehicles record 1.5% decline, however, as the fleet operators postponed the purchases because of the BS7 norms. That was another aspect that played out. Now, domestic CV wholesale volumes, however, increased by 11.4% and 7.8% on a sequential basis. What we've seen is wholesale volumes for the first 7 months of FY26 grew by 4.5% on a year-on-year basis. That was driven by freight movement and infrastructure development momentum as well. So that's as far as the CV space as a whole is concerned. Help me understand your take of how do you see the commercial vehicles business pan out, and which are the companies that are better, at a better position at this point in time?
The commercial vehicle business will definitely keep doing better, okay, because we've now had a lot of investment in infrastructure projects. So that actually sees an upswing, which is positive. The one area where I would have loved to have seen much more investment and much more capacities being built and a lot more focus also of the government is in the public transport system, which is buses primarily. Okay, the bus segment has to do much better. For that, the central government as well as state governments, okay, with their state transport corporations have to increase the penetration of buses. Right now, I think it stands at something as low as 1.6 or 2 buses per 1,000 people. Okay, that is a massive sector. So if there is the right amount of incentivization there by the government, by the policymakers, we would see a far greater growth in the commercial vehicle segment. Because don't take commercial vehicle only as goods transport. But the primary increase in commercial vehicle segment would be driven more by infrastructure. And you mentioned freight, yes, but I would say it would be largely driven more by infrastructure. And hopefully the bus transport also goes up.
Okay.
Specific players who would do very well here. I don't think anybody really losing out, because when the market grows at this kind of a rate, everybody makes they actually make
Sure.
hay.
What about
And
two-wheelers and passenger vehicles? If you could also add there, what is the kind of expectation that we should currently have from these two segments vis-a-vis CVs?
two-wheelers is my concern area. Okay, we do see revival, but the revival needs to be at a much faster pace. Okay, now it can either be driven by the gig economy and by the entire e-commerce sector. Okay, but that is a very different kind of a two-wheeler that we're talking about, right? We're talking about largely electric two-wheelers there. Okay, we need the individual two-wheeler numbers to go up on a more sustained basis. And when that happens, that is when really that actually it's like a pyramid. So it feeds into the bottom end of the four-wheeler segment. So it's typically like when I see people around me buying more and more two-wheelers, and I'm a two-wheeler buyer. Okay, there is always this urge to actually do a bit better than them. So I might go ahead and buy actually a used four-wheeler, or I might stretch myself and buy a new four-wheeler.
Okay.
So, but unless that pressure is created by a sustained growth in the two-wheeler market, it will, the four-wheeler market will not actually grow in a sustainable manner. And so that's what I really see.
Sure. Avik, are there any, towards the end of the show, are there any expectations that you already are penciling in as to what could be the percentage of hikes across these segments upcoming in January?
I'm not a fortune teller, nor am I a soothsayer, so I really can't talk about percentages. But what I can say is that yes, it would be anywhere between 1.5 to 2.5%. Okay, as a band of pricing. Different manufacturers, given their own individual pressures, okay, would play within that segment. I think anything beyond that, they would again be sacrificing their own numbers.
Right. When we were assessing the GST rate cut impact, we actually saw it was the smaller cars that gave the maximum benefits by way of price cuts. Do you see that band getting more price hikes? I just wanted to get a broad understanding of where the price hikes could be more.
Small cars, again, a manufacturer needs to take that call. Unfortunately, in India, we have very few small car manufacturers.
Yes.
Okay, we just have a Maruti Suzuki, we have a Hyundai, and we have Tata Motors. So Tata Motors doesn't really focus. The focus is now definitely getting into much larger vehicles.
Sure.
So for a Maruti Suzuki and a Hyundai, or primarily a Maruti Suzuki, okay, to again, they would have to do this very fine balance between numbers and profitability. Okay, and they would need to decide as to whether they want to get the gross profits going up or per unit profit going up. Okay,
sure.
Right now we do see an improvement in the entry level numbers. To me, it is very important to maintain that momentum, and Maruti is the only one who can actually maintain that momentum. Okay, Maruti, yes, possibly their last quarter profit numbers have not been as per their expectations, but I guess somewhere they need to take that call, because over the last 4 to 5 years, they've actually had a bull run when it comes to per unit profits. And now to really grow the entry level or the bottom end of the market, if they do need to sacrifice a bit of their per unit profitability for the larger numbers, I would request them to please go ahead and do that.
All right. Thank you so much, Avik, for being with us on the show and detailing for us all the insights as to how should we really look at the auto industry, how should we expect the price hikes going forward from here, the earnings and the demand growth also going forward from here. Thank you so much for your time.
My pleasure.
All right, viewers, we'll now wrap it up on that note. The markets are in fact still about 200 points higher in trade. When we talk about the auto sector particularly, that's something that we should be watching out for, because Tata Motors has already indicated that they are going to be going with the price hikes, and we are expecting to see a lot of that information to follow, with the other companies also announcing the same. 0.6% higher for the auto index, at least for now. Tata Motors passenger vehicles is up by about 2%. Remember, the stock was hovering lower for the last couple of days. CV space is also up by about 0.7%. Let's see how the space really pans out, and do we see more announcements coming in from other OEMs in the days to follow. Stay tuned with us.
For 25 glorious years, Business Today Golf has defined the legacy of corporate golfing, where CXOs and champions come together to compete, connect, and celebrate excellence. And legends from sports and business alike have walked these fairways.
Corporate golf is very good, which I feel very happy.
All the best to BT because they've done a great job.
Enjoy the BT golf. It's more of fun, more of enjoyment.
And it's always nice to come to a golf course, you meet so many different people.
As we celebrate over 25 years of legacy, we tee off for a new chapter on November 29th in Hyderabad.